Ladies and gentlemen, good day and welcome to Solara Active Pharma Sciences Limited Q2 and H1 FY25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Abhishek. Thank you, and over to you, sir.
Thanks. A very good afternoon to all of you, and thank you for joining us today for Solara Active Pharma Sciences earnings conference call for the second quarter and half-year ended financial year 2025. Today we have with us Arun, Solara's founder and non-executive director, Purvank, MD and CEO, and Arun Kumar Bhaskaran, CFO, to share the highlights of the business and financials of the quarter. I hope you've gone through our results release and the quarterly investor presentation, which have been uploaded on our website as well as the stock exchange website. The transcript for this call will be available in a week's time on company's website. Please note that today's discussion will be forward-looking in nature and must be viewed in relation to the risks pertaining to our business. After the end of this call, in case you have any further questions, please feel free to reach out to the investor relations team. I now hand over the call to Arun to make his opening remarks.
Thank you, Abhishek, and good afternoon, everybody. Thank you for joining our Q2 earnings call. To start off, we are extremely pleased with the progress that we have made in the last 2 quarters post our reset. Solara is calibrated its growth, focusing on profitability. And at 50.5% gross margins, we have now reached our historical highs with an improvement of 620 basis points Y-on-Y and approximately the same number Q-on-Q. As I mentioned the last time, our focus is on profitable growth and at cost containment. And all of this have played through well for our EBITDAs to be reporting at 61 crores, a growth of almost 46% Q-on-Q and 61% Y-on-Y. Of course, it's not a comparable quarter given a disastrous performance that we had in a comparable quarter last year. Having said that, the company is completely reset with this disciplined approach to business. We're excited that our revenues from the regulated markets now constitute 76% of our business. Growth is a function of setting the house in order, which we have, and in spite of that, we are in line to meet our outlook across all parameters. So revenues in H1 are approximately almost 45-47% of the annual guidance, which is also gross margin guidance. EBITDA at 61 crores, and if you equalize that for the next 2 quarters, we should be comfortably within the EBITDA guided for the whole year. We are very confident that our Q4 will be within the guided numbers of 80 to 90 crores of EBITDA and trending at around 20% EBITDA. In H2, we've already moved our EBITDA percentage points significantly from 11.6% in Q1 to 17.7%, which is akin to the catalog generic industries business. But given that we are heavily focused on the regulated markets and with all the actions that we have introduced with cost containment, we are very confident of meeting those exit quarterly outlooks too. Overall, a very pleasing outcome and a strong comeback. So also the balance sheet, focus on the balance sheet, including the debt book, adjusted for the uncalled rights between the next 2 years. We are in a comfortable debt to EBITDA of under 2 times, and this will only improve if we hit our guidance, it will be less than 1.5 times. One of the key actions that we took was our cost containment, and I'm very pleased to report that our costs have come down quite significantly without compromising compliance or quality. We have also reported 3 significant quality events, including European approvals for 2 of our plants and an FDA approval for our R&D center, which also does some work related to our filings. So overall, a good outcome. As all of you know, almost 35% of our total capacities was mothballed, with our Vizag plant being mothballed while we retrofitted the plant, or while we are in the process of retrofitting rather. We do not believe that there is a need for us to have a dedicated facility for ibuprofen, a second dedicated facility. So as we communicated the last time, we are converting that plant into a multi-purpose plant, including HAPI, and we should be high-potency API. So we should be in a strong position to get that plant back on stream in Q1 of FY26, and we probably have 3 full quarters in FY26 when that business will start adding to our overall growth. So this year our focus is calibrated growth, focus on margin expansion, customer satisfaction and compliance, which we are on the right track. And then in FY26, we'll have Vizag driving the growth to the next level. So I think we have probably exceeded our targets by a quarter internally, and which is great. But having said that, we still have got lots of work to do, and we do appreciate the patience and the support our investors have provided in these difficult times that we just passed by. But we are now looking at a very strong Solara coming back to its historical highs in the next 2 quarters, and I'm sure that it will be a very rewarding ride for everybody. Thank you all, and we're more than happy, like Abhishek mentioned, I have my colleagues Purvank and Arun, who's our CFO, in the call, assisted by Raghavan. And if you have questions, please do not hesitate to ask us. And like Abhishek mentioned, if you don't and you have them later, please email them to us and we will respond. Thank you.
Siddharth, you can take the Q&A.
Sure, sir. Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Tushar Manudhane from Motilal Oswal Financial Services. Please go ahead.
Yeah, am I audible?
Yes, Tushar.
Yeah.
Sir, just on the gross margin firstly, sequentially the regulated market share has been stable at 76%, but still we've seen a jump in gross margin from 44.5 to almost 50.5. So if you could just explain that.
Well, it's mainly leading to our focus on cost containment. As you can see, our OPEX has dropped almost by 40 crores, although in that quarter we had Vizag. But if you look at a like-to-like quarter, Q4 24 at 130 crores to Q2 at 113, cost focus has been a very important factor in terms of capacity utilization, planning, and cycle time management. So that is what is lifting the...
Sir, on the gross margin side, not the OPEX, on the gross margin, before OPEX.
Okay, sorry. Yeah, so if you look at our portfolio, while 76% of our business comes from the regulated market, we do have a higher focus on the more profitable products. And we do have now some of our customers launching some of the products that we had developed a couple of years ago. So those are niche, small volume products at significantly higher margins. But also our margins were positively impacted by a higher CRAMS business that we reported in the quarter.
Okay. And sir, now taking this 100 to almost 400 crores from 347 on. So any specific product you would want to highlight which will take this revenue trajectory up?
Indicate products, but our polymers division is now fully sold for capacity. So we do several polymers. We're one of the few players in India. We are fully sold for capacity, and Vizag, in fact, is being retrofitted to add more capacities around that line of items. It's a very complex chemistry, not many players out of India. We supply a lot of the players. In fact, we supply almost all the A&A players in the US market for this product. We see increasing demand as the innovator loses market share, and It's just focusing on the right product, right customer base.
All right. Thanks and all the best.
Sure.
Thank you. The next question is from the line of Aman Sathi from iWealth Management. Please go ahead.
Hello, sir. Am I audible?
Yes.
Yes, sir. Thank you for the opportunity, sir. So as we have mentioned in our press release that our regulated market contribution is at around 76%. So, sir, this used to be the peak contribution in the past. So is this the ideal peak or are we anticipating it to go further?
Regulated market contribution can go higher.
No, I think we are comfortable at these levels. We obviously are not comfortable with the revenue size. We have enough opportunities to grow the number from 347 to, we have already guided for the Q4 exit run rate at 400 crores. So if the percentage of the reg market will remain at that, then obviously that will add further benefits to the gross margin and EBITDA.
Got it, sir. Got it. And sir, another question was that how many DMF filings are we targeting? We had a large portfolio of around 70 to 75 DMF. How many launches are we targeting per annum?
So to be very candid, we are not focusing on too many new DMFs. Our focus has been to improve the cost of our existing DMFs through very active and rigorous cost improvement programs and onboarding customers for existing DMFs. But that notwithstanding, we continue to develop new products, and we have how many filings?
We already have 95 US.
How many this year we have filed?
So around 4 to 5 filings.
Yeah, so we'll have about 4 to 5 filings because the focus is to try and commercialize as much of our existing portfolio rather than building new ones. For vanity, we are focusing on building a nice portfolio of products or bringing back some of the DMFs which are not very active.
Yeah.
Understood, sir. So only 3 to 4 you said, right?
Yeah.
Yeah. Okay. Thank you so much. That's it from my end.
Thank you. The next question is from the line of Amresh Kumar from Geosphere Capital. Please go ahead.
Thank you, sir. Sir, I have one question on the OpEx part that has been brought down significantly, and now it was only 114 crores last quarter. So how do we see this trajectory going forward? Do we consider this as a base now, and further improvement will be from operating leverage?
No, so you need to understand that we actually mothballed Vizag, which is almost a 45 crore spend in the last financial year, which means that it's not necessarily like to like, but a base OpEx, which was approximately 130 crores, 135 crores, has come down to 115 crores. So that's a good news, and we should be able to bring that down a little more. But next year, then Vizag will go back to not to peak operations, but at least for 3 quarters we'll have peak operations. So to address your point, I think the current legacy business, we should probably have another 10-12 odd crores of savings in the next 2 quarters. But in Q4, in FY26, we'll go back, and when we add Vizag, we will probably get back to about 130, 135. But it just delivers a very significant new revenue opportunity because Vizag is our biggest plant in terms of capacity.
Got it, sir. Okay, so then on the revenue growth part, sir, now that you have mentioned that Vizag will be in full operation for the 3 quarters in the next year, so if you remove that out, what should we be considering the revenue growth for next year, FY26? Because you have said that 4th quarter number would be about 400 crores, and that is typically our best quarter for the year. So should we be considering that as a base or?
Yeah, so Amresh, you need to learn to accept a company guidance. We guided for a Q4 outcome, right? Let's get there. In Q4, we can have this conversation what 26 will look like. At this time, I'm willing to give you a 26 outlook.
Got it, sir. Thank you so much for these numbers. Thank you so much.
Thank you. The next question is from the line of Monish Shah from Antique Stock Broking Limited. Please go ahead.
Yes, hi. Just wanted to, take your view on the pricing in the API portfolio for us as well as the industry.
Well, Manish, it's not about pricing, right? The question is that if you shift your focus to the right markets, you obviously get a better pricing. I just think that we have reset our business from being all over the place to be very focused on what we want to achieve. And the numbers that you're seeing is a reflection of a course correction and not necessarily the market dynamics. Considering that 76% of our business is regulated, which effectively means that we are the primary supplier in most DMFs, or more than half of that 76% goes to Big Pharma. There's stability in our pricing, right? So it's not that we are seeing a pricing pressure because we are not challenging anybody to take higher market share. We have just course corrected our business from what we used to do very well to what we are trying to get back to do well again. So I don't think these ratios of improved gross margins should be a reflection of price improvements. Is how the company was in a particular spot and how we are turning it around.
Okay. And also you mentioned that, CRAMS was a reasonable contribution for this quarter. Can you highlight as to how much was the, revenue contribution from CRAMS this quarter?
It's suboptimal. I mean, it's a better quarter than last, but we are still less than 100 crores on an annualized basis on our CRAMS business, but it is growing. And it will grow rapidly because we have seeded a lot of customers. We've started getting business, and this will be an important part of our business 2 to 3 years from now. But as we speak, we are very happy with the logos that we have managed to convert, the type of products that we do, and it takes time for our partners to qualify us, to be on their files. It's a big process, but we're very delighted with the progress we are making here.
Perfect. And lastly, what should be our tax rate assumption for next year and even for FY25?
So we are currently at zero tax because of our carry forward losses, and for 1 more year, I guess.
So from 25, should we assume it will be a 25% tax rate? Sorry, from FY26, should we assume it will be a 25% tax rate?
FY26 also zero, Manish.
Okay.
From 27, it will change.
Okay, got it. Yeah, that's it from my side. Thank you.
Thank you. The next question is from the line of Yagdish Sharma, who's an individual investor. Please go ahead.
Yes, sir. Sir, I have 3 questions. The first question is our net debt is below 500 crore, taking into account uncalled rights issue money of 222 crore. How do you see our net debt going forward? Will our company, like Solara, be net cash positive by next year?
Not by next year, but I think we need probably a year and a half because we also have CapEx to grow right back. We plan to run our CapEx programs through internal accruals, as we have already communicated. But I think by FY27, we should be in a very strong position or very close to being net cash.
Okay. So my second question is, what is our top 5 and 10 products contribution to our revenue? Or is there any risk from prices of ibuprofen? Can it go further down, or at the current level, will it be sustainable?
Well, we don't have any specific. I mean, ibuprofen clearly is our number 1 product, and this group of ibuprofen is almost 25% of our global revenues for a long period of time, more than 20 years. And I think it'll stay at that because we do supply to some of the bigger names that consume ibuprofen, especially the branded companies. We do have several other products, but we don't call out any of our products. Of course, the ibuprofen and its range is our biggest product. Outside of that, we are not very dependent on any one single portfolio. Ibuprofen also, we have de-risked it by getting into several analogs of ibuprofen, and therefore we have kind of moved into derivatives and a lot of other products within the ibuprofen group, and value adding it by having direct compressible grade ibuprofen. But overall, our historical dependency on ibuprofen has reduced dramatically with a shift in our tactics and our strategy over the last 6 months.
Okay. So my last question is, other CDMO players are talking about benefits from biosecure. Will Solara benefit from it? If yes, how?
Well, I think the Biosecurity Act is very specific to biologics to a very large extent. There's a China plus one factor that companies are considering, but I don't think the Biosecurity Act has got anything to do with APIs or formulations. But having said that, companies are reviewing strategically at their board levels on sourcing strategies and supply chain security. Clearly, we are seeing benefits out of that, but is it a flood? The answer is no.
Okay. So, just a clarification. Ibuprofen is a 25% of our company, but you didn't mention anything about our top 5 products, right? What is the contribution you didn't mention, right?
I didn't by design, yeah.
Okay, so ibuprofen is at 25%. Okay, sir. Congratulations, sir, on margins improvement, and thank you. All the best.
Thank you. The next question is on the line of Dhaval Shah from Girik Capital. Please go ahead.
Yeah, am I audible, sir?
Yes, sir. Please go ahead.
Yeah, thank you. Yeah, so my question is regarding the Vizag facility. Just want to understand, post the Vizag refurbishment, what we are doing, what will be the gross block at Vizag?
Gross block is about 500 crores, 500 odd crores. That block is about 250 crores. And I think we have a capex plan for about 100 crores.
Okay, so existing gross block is 500 and plus 100 you will be adding.
That's right.
Okay. And you mentioned at the last call that the Vizag facility, since you are mothballing it and creating a new and a much better improved facility and also focusing on CRAMS, so the asset turns should be a bit better than the existing asset base?
Well, currently, if you minus Vizag, we have one of the industry's leading asset turns. But Vizag will probably take at least 2 years before it turns at least 1 to 1.2 times. It will take us at least 2 years to get there.
Okay, 2 years to get to 1.2 times. Okay. And so in the last call, our contribution for CRAMS was mentioned around 5 to 8% of sales, and the target was to achieve 10% for 26. What is the number for second quarter, and are we on track there for 26 to achieve 10%?
So Dhaval, we don't give specific numbers by quarter. I did mention to a previous question that we expect revenues to be at around 100 crores this year. And when a guided number of 1,500 crores, that is about 7 to 8%, as you will appreciate. And then it'll grow from there. So we are on track to meet those two sub-guidances, if you may.
Got it. And how many DMFs we plan to file over the next 2-year period? If you will give a fight.
Currently, we have a plan of only about 4 to 5 products because we have a tremendous asset book of DMFs, which we are focused on bringing back to market first before we file new ones and find new customers.
Got it. Okay, sir. Thank you very much. Good.
Thank you. The next question is on the line of Prachi Chajani, who's an individual investor. Please go ahead.
Hi. Good afternoon, sir. I just have a couple of questions. So my questions actually revolve around the Vizag facility. In our presentation, I think we've highlighted our strategy around Vizag. So if you could provide more details as to what molecules are we targeting from this facility, And I think we've also guided that to start this facility by Q1. So what kind of under recoveries will we have in FY26 from this facility?
I can answer the second question. We will have zero under recoveries in FY26. And as regards products, we did mention that we'll continue to make ibuprofen and derivatives as a second source, but in a much smaller quantity. And we are moving our polymers, we are increasing our polymers business. We don't give specific product names in polymers, but we are the largest producers of specific polymers in India, which is used for pharmaceutical use. And we will be expanding our capacities in Vizag to include our increased demand for that portfolio.
Got it, sir. This was helpful. I'll get back in the queue in case of more questions. Thank you.
Thank you. Next question is from the line of Nitesh Dutt from Burman Capital. Please go ahead.
Hi, thank you for the opportunity. Sir, I have one question. So we have seen a remarkable turnaround over the last 6 to 12 months. Would be really helpful if you give some commentary around what have been the changes that have taken place, right, under the course correction measures that you are talking about, and what has tangibly changed. So, for example, has there been a substantial change in your product portfolio? Similarly, the OPEX that you have reduced, what kind of measures you have taken to achieve that?
Yeah, so I think primarily it is governance, right? So you have heightened governance in terms of course correction. Second, we don't chase revenues unless they are profitable. So we have governance around it. We have a very focused approach on cost optimization and cost improvement programs. Very standard, which most companies in a situation that we were would do. I just think that our oversight on and with the team that we have, and Purvank and the rest of this team do a good job, and I take all the credit.
Got it. Thanks. That's all I wanted to ask.
Thank you. The next question is on the line of Shaurya Punyani from Arjav Partners. Please go ahead.
Hi, am I audible?
Yes, sir. Good. Yeah.
So in the last call, you mentioned about entering into peptides. So is there any update on that?
The update is yes, we have entered.
Okay. Do we see any sort of potential revenue potential maybe something like that?
Well, I think so. See, everybody talks about peptides. It's more fashionable than anything else. Everybody is in it. We are in the value chain of the peptide manufacturing for some of the larger players. We don't do any work with big pharma, if that was one of your questions. And it's early days, but we are in the peptide space, yes.
Okay. Thank you.
Thank you. The next question is from the line of Ankit Minocha from Aditi Ventures Family Office. Please go ahead.
Yeah, hi, good afternoon. The response to the previous participant that the GM expansion has been driven less by pricing and more by regulated markets was well understood. But I just wanted to understand from your expertise of the industry and view of current input costs, what do you think API pricing looks like in the coming 6 months?
We work in an industry where we can't predict what happens next week, so you're asking me to answer an impossible question. I personally think, in a general view, the API pricing stability is a function of supply chain disruption. So if you chase volumes and you chase the same DMF that many Indian companies have, obviously you find pressures on pricing. We have that. We have seen with new entrants in ibuprofen, ourselves facing significant price challenges on key products. I think there's been method in the madness, and pricing has more or less stabilized across. So I would say we have probably, to answer your question differently, probably we have hit the bottom. I think at these rates, companies like ours and many others will aggressively